Financial accountants follow generally accepted accounting principles, also known as GAAP, in preparing reports. These principles and concepts are the result of research, accepted accounting practices, and regulatory pronouncements. Some of the agencies charged with delivering accounting regulatory pronouncements include the Financial Accounting Standards Board, the Securities and Exchange Commission, and the International Accounting Standards Board. Significant differences currently exist between FASB and IASB. However, FASB and IASB are working together to reduce and eliminate differences into a single set of accounting principles. Such a set of worldwide accounting principles would help facilitate investment and business in an increasingly global economy. Proprietorships comprise the majority of businesses in the United States. Partnerships are not as common as sole proprietorships, but they have some benefits over a sole proprietorship. One of the benefits of a partnership over a proprietorship is that it enables owners to combine the skills and resources of two or more individuals. The owners of a corporation are called shareholders or stockholders. Shareholders do not own the corporation directly. Instead, they own shares of stock in the corporation. One of the benefits of corporate ownership is that shares can be easily traded by owners. Issuing shares of stock enables corporations to obtain large amounts of resources. As more stock is issued, the ownership of the corporation is divided among its stockholders. An owner's interest in the business is represented by the number of shares of stock he owns, relative to the total shares issued by the corporation. So if there are 100 shares issued in all, someone owning 10 shares owns 10%, or 10/100ths of the corporation. A limited liability corporation combines some of the qualities of both corporations and partnerships. Unlike partnerships and proprietorships, corporations pay taxes on the earnings of the business, and their owners also pay tax on the dividends they receive. A limited liability corporation can elect to be taxed like a partnership and avoid the additional taxes paid by corporations. Business enterprises or entities generate economic activities. The business entity concept ensures that economic data captured by the accounting system is limited to the transactions in which the business is engaged. Transactions of other entities and owners are excluded from the accounting system. Only the business transactions and not the personal transactions of the owner are included in the business's accounting system. When an owner purchases merchandise for the business, this is a business transaction and is included in the business. This transaction will be recorded in the records of the business because it is directly related to the business. However, if the owner buys a television set for his private use at home, this transaction will not be included in the accounting system of the business. The purchase of personal items with personal funds, even by the owner, is not an economic event that relates to the activities of the business. These types of transactions will not be included in the business's accounting system. The cost concept, also called the historical cost concept, guides the amount at which business transactions are recorded. If a business wants to purchase a building, many different dollar amounts for the building may be discussed. The cost concept states that the actual exchange price, or the amount the buyer pays the seller, is the value to use when recording this transaction in the accounting records. This transaction would be recorded as $150,000. The cost concept is also based on two additional accounting concepts, the objectivity concept and the unit of measure concept. One of the main reasons the cost concept is so important is because it is objective. It is the actual amount that was paid by the buyer to the seller. It is not subjective or someone's opinion of the value of the land. For a transaction to be recorded, it must be able to be measured using dollars, the standard unit of measure in the United States.